good afternoon, good evening, wherever you are. I'm your host, FD for Switchfab.tv, and today in this video, I want to review and reflect on some failed narratives that I had high hopes for, but to date, they've been a disappointment. That's what I want to cover in this video. But before I proceed, guys, please know that I am not a financial advisor. If you do require financial advice, please approach someone who is already trained to give you financial advice. The information contained in this video is just for educational as well as entertainment purposes. And if you are not subscribed, please subscribe to our channel. We are trying to grow our channel, and we know with your help we will get there, and it doesn't cost you a penny. So please, if you get time, please do subscribe to our channel. So without further ado, let's jump into what narratives I'm reflecting on. The ones I picked at the start of the current bull market, and some I actually went in and invested in. Others we invested into them as part of our DIWA or our risk evaluation. We are not going to be going so much into naming names. We might make some references, but in this video we just want to cover the fundamentals of this narrative. So let's start by going into why these narratives have struggled so far, and let's take a look at each narrative. Let's start with artificial intelligence or AI crypto coin. Crypto and AI was going to be the next frontier, and I still believe it's going to be the next frontier. Tokenized AI agents, decentralized compute, data markets, crypto native AI ecosystems. Many projects claimed to be on-chain AI with tokens for agent creation, data training markets, and autonomous bots. But what went wrong? Well, many of these projects under-delivered. According to a recent Techopedia piece, crypto's early attempts at agentic AI may have crumbled, but mid-rubble, the foundations of a new DeFi, DEFF which is decentralized finance for artificial intelligence or buy-in artificial intelligence, could be taking shape. The infrastructure cost and technical complexity of building useful AI models, as well as on-chain tokens and decentralized compute, is quite huge. Too much hype, not enough working products, and so forth. I think we've all experienced a lot of hype when it comes to AI agents. I can just reference a few here. And the token narrative outran the utility. Lots of AI token means agent marketplace promises, but few projects reached significant use. Investopedia does not display between legitimate infrastructure and viral tokenized agents with little core product. Investor fatigue and narrative shifts as AI hype exploded in Web2 and technology. We're talking of the likes of Nvidia and Mistral. Many crypto AI agents or tokens failed to capture real crossover. And let's not forget capital misallocation as well, where most of us, we invested in many tokens that were marketed as AI, but were really wrapper, little model IP, or just speculative hooks. So that's on AI. And like I said, I invested in a good range of those. Probably half of them were not good. Yeah, you probably know which ones if you've been watching our videos from the beginning. The next narrative was metaverse, NFT, and gaming coins. Virtual worlds, digital land, play-to-earn games, NFT ownership, interoperable assets, metaverse economies. You buy the token, buy the land, build the game, and token. But what went wrong? Well, adoption gap and real-world utility was weak. The metaverse hype peaked early, but user numbers, sessions, monetization remained low in many projects. Wikipedia entry on metaverse notes that major virtual estate prices crashed and platforms have extremely low DAUs relative to high. And as for gaming and NFT hype, there was no sustainable economy. While NFTs gave ownership, many gaming projects lacked deep gameplay, retention, regular monetization. An article on NFTs in gaming and the metaverse shows that the space is still evolving and is still in its early stage here. So if you do pick a good NFT or gaming project at this time, you are probably jumping in a lot earlier than most people. So don't rule out the gaming and NFT crypto projects just yet. They may just surprise us. We're waiting for the narrative to actually take off. But many were speculative driven, mostly through pricing. Many tokens were valued on when will one land parcel cost 100 ETH, not on actual net flow or game activity. When the hype faded, many flows collapsed. And finally, we got fragmentation and interoperability issues. Assets logged in silos. Many projects lacked decentralized composability, cross-game movement, or mass user onboarding. Moving on to gaming coins, here I'm referring to play to earn or gamify. And gamers were being promised the idea of earning tokens, playing for yield, building economies, guilds, creator-driven content. But what went wrong here with this narrative? Well, there was yield fatigue and token emission issues. Many play to earn or P2E games issued tokens heavy on rewards but light on real sustainable revenue. The tokenomics were effectively unsustainable, and there was also low player retention. While early adopters jump in for token rewards, long-term players expect quality gameplay. Many blockchain games didn't compete with AAA or mainstream games. That's just a fact, because in Web3, the gaming aspect is quite poor. It's of low quality. Moving on to user experience and onboarding friction, wallet setup, gas fees, learning curve, bridging issues, all that kept mainstream gamers away. And there was also a play with regulations and monetization as well as cloud issues. Game studios pulled back Web3 wings due to regulatory uncertainty or user experience risks. So there were not that many conventional gaming studios that actually jumped onto the Web3 narrative. That's why we haven't seen some decent games coming. There have been some, but not a lot. And most of the ones that have come, they are not really your household names when it comes to gaming. And this narrative was also overshadowed by the broader crypto malaise. When crypto suffers, speculative gaming tokens get hit first. I mean, it's just the same as when the real world economy suffers, crypto gets hit first because it's high risk. Same with gaming, it's quite a high risk niche within the crypto ecosystem. So, are there any chances of revival, short term and long term? Well, I think yes, but revival isn't guaranteed. There is potential, but with some caveat. If we look at the short term revival prospects, you're talking 6 to 12 months, factors like the narrative rotation, if crypto markets shift back into utility narratives rather than purely store value, AI and metaverse or gaming might just get a boost. For instance, when Gecko notes new narratives in 2025 included tokenized real-world assets or RWAs, L2s, and deepen, but warns narratives can mislead. That's quite true. Then there is product release, flagship games, and partnership. A major game or metaverse platform launching meaningful user adoption could reignite interest. Macro liquidity tailwinds could also play a part here. If crypto indices rise, risk appetite returns, speculative sectors often lead early. If AI tools integrate into gaming and metaverse, it could re-energize those narratives. For example, user-generated agents, creator economies, plus gaming. And lower valuations may also attract speculative capital looking for cheap narrative plays. As for long term, you're talking of 3 to 5 years. Is there any prospect over the horizon? Well, let's look at user behavior first. Is there going to be a shift? More digital native users, Web3 gamers, creator economies may mature into genuine mass adoption. And if there is improvement with regards to interoperability and infrastructure, we're talking of cross-chain assets moving across different networks, metaverse and virtual land link with real-world economies, then big opportunities might present themselves. Games and metaverse platforms generate sustainable income from brands, advertising, and experiences. So if there's real monetization, making token models more robust, that could add more traction in the medium to long term. And then if you combine decentralized compute and AI agents, gaming, and virtual world, this could become a killer combination. But a developer needs to hit the sweet spot. Without that combination being balanced optimally, there might not be no traction at all. So that combination needs to be balanced quite right. And there's also the prospect of unique value capture. If a project becomes the platform for virtual worlds or AI agents, then token economics may also benefit. But why the underperformance is meaningful and not just bad luck? Well, narrative is not equal to product ready. Investors priced early, but many projects were still prototype. Hype and issuance happened ahead of usage. Then there is speculation saturation. By the time you bought, many other speculators already had. Marginal buyers brain. You're one of those who followed others. You're left holding the bag, which describes most of us or many of us. Macro environment less favorable. When risk off dominates, speculative narrative are hit the hardest, and AI and gaming as well as metaverse are second tier compared to major chains or store value assets. And if you are like many of us, you don't need anyone telling you that with the gaming and metaverse, there is always that tokenomics misalignment. Many tokens rewarded early adopters and insiders heavily, creating sell-off pressure when hype faded. And finally, there was a switch in narrative leadership. It moved away from AI and gaming to store value, layer ones, real-world assets, and yeah, that also contributed. This bull run is quite different as well. If there is, say, an out season, it's not going to be every token rising. It's only a select. It's kind of focused or pinpointed, the focus within the market. People are actually moving in waves, and they're not moving in waves that will raise all boats, but it's in waves raising specific boats, not everything. So that is, yeah, that switching narrative is quite confusing. It's nothing compared to what we've experienced in the past, something totally different. And from what we just covered in this video, guys, my practical advice for myself in the future and for whoever is listening, if you want to use this, but of course you need to do further research because I'm not a financial advisor. This is how I'll be looking at things for future gamble. I'm going to focus on fundamentals, not just narrative, but actual daily users, monetization and retention. And I'll be looking at tokenomics as well. The tokenomics structure is quite important. We've got to check that. Are there large unlocks ahead? How is value captured for token holders? I think I've been considering, but I think I need to be more stringent when it comes to tokenomics. Our time horizon also also matters. These narratives are longer haul. If I bought expecting quick gains, that likely mismatched tech timeline. And I also have to wait for proof of life. Before heavy allocation, we all need to be watching for the real launch, real users, and real revenue. Ignore the short-term pumps suffering from FOMO and stuff. Wait for the actual launch of the platform, mainnet, and the product itself. We need to wait for that. And it's also important not to put all our eggs in one basket. For example, just putting all our capital in one AI token. I know some people say heavy commitments, but that goes against reign of diversification. So instead of you pumping all your money into, say, Apecoin, its metaverse, like I did when it comes to metaverse, there was one I actually was championing for because I believed in it. I went heavy in Remark and I got banned, live and learn. Watch macro and narrative shifts. When risk appetite surges, these speculative sectors can bloom, but when risk off hits, they get hit hard, and we all learned that hard lesson. So my final thoughts on these guys is, I know I jumped in with high octane dreams, the metaverse land, sell like beachfront condos, AI tokens that will turn bots into portfolio kings, game tokens that will pay me while I play, but the runway turned out longer. The engine sputtered, the crowds didn't show up, at least not yet. These things may still get back, but some of them may never come back. Here's the kicker though, in crypto timing is everything. The narratives we just covered in this video haven't died, or most of them haven't. They just needed to build more than just vision. One day the land will be built, the avatars will populate it, and AI agents will earn, and the gaming token will reward. When they do, the ones who held on and bought or averaged in when others ducked might get rewarded. So yes, the gamble might not have paid off yet, but they might not be wasted. They might simply need the clock to tick, the infrastructure to mature, and the crowd to catch up. Keep the seatbelt on. The ride may be delayed, but the destination will be worth tickets. Anyway guys, share with us the narrative that you have invested in, and if you are brave enough, the actual tokens and projects you invested in, and whether you think those projects or those narratives are coming back. Until the next one guys, FD for Switchback.tv signing out.